Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. It's Friday. We made it to the end of the week. What do we got going on in the stock market today? Well, NASDAQ's up about 50. Dow's down about 50. It's kind of a flat market. It's been that way the last couple of days. No real excitement yet. The SPY trading about 397. Now it hit that high. It went up to 410. Came down to 397. Now somewhere it's going to make a run back up, but I don't think it'll get to the 410 level. It will before it turns back lower. I still think this stock market's going lower. A lot of people are expecting that Santa Claus rally, a lot of big names. I don't disrespect them. I just don't see that happening this year. Yeah, we may rally back towards that 410 number, but we're not going to overshoot that. We're going to come back lower. That's my take on the marketplace. We'll see how that plays out. Let's get over to the real estate market now. Now, the real estate market, well, let's just say it's been a great boom, right? I mean, the last 12, 14 years, nothing but straight up. It just boomed up higher. But every great boom ends with a great bust, right? I mean, the bubble explodes and then it pops. You know, you expand the bubble out and then it collapses. This is going to collapse. It's going to turn downward. Every great boom is followed by a great bust throughout history. That's just how it works. Now, Redfin, you know, one of my favorite articles to read is always Redfin. Now, they say in 2023, nothing to worry about because mortgage rates will, well, their quote was they will fall back to earth, meaning they'll come down lower. Now, I don't know if they will or not, but here's what I do know. If they do come back down lower, that means we have a much bigger problem. You see, the Fed's trying to fight inflation by raising up rates. Now, if it just waves the white flag and doesn't fight that inflation anymore, it means something broke, right? And if the mortgage rates come down, we're going to have a lot bigger problems. See, right now, the market's come to a grind. We're down like 40% overall. I mean, sales volume, not prices. Prices will get down 40%. I'm predicting 50%, but they're coming down. We're only down about 10% from the price that Billy Bob got out at. Well, what's interesting to me in this marketplace, we have 1.5 million people, right, that are behind on their mortgage payment. They're not making their mortgage payment. And these are the good times. They could probably still go and sell that property for, you know, and get some money back. They're not underwater yet. However, we talked in the last video that 500,000 people are already underwater. Now, that's really not that many. I expect that number to become 5, 10, 15 million people underwater. Now, when do foreclosures really start to spike upward? Well, they start to spike upward in a recession first. That's when foreclosures start to spike upward. But they also tend to spike upward when people are upside down on their mortgage, when they owe more on the house than the house is worth. They don't want to pay anymore, and so you're going to see this big spike in foreclosures. Now, what happens there is you get, well, when people get underwater, now we had that back in the 2008, you know, the great financial crisis. People got underwater, and what did they do? Well, there were a lot of short sales. Short sales mean you sell the house for less than your mortgage, and you don't get any money, but the bank forgives the difference. But so that can happen, and they also have a lot of foreclosures. People that don't stop paying and they don't negotiate a short sale with the bank, they get foreclosed upon by the bank, and the bank then has a lot of these bank-owned properties. Now, the bank does not care what they sell these properties for, because they do not want these properties on their books. It looks bad for the bank to have these properties on their books, so they give them to real estate brokers such as myself, and they say, Mike, go out there and sell this property. And I tell them what it's worth. I can only get this much for it. And they go, well, we took it back. We owe a lot more. The person that bought owed a lot more, but it's what's called the short sale. It's what's called the foreclosure. The bank took it back, right? Okay, but the bank took it back. Let's say they had a $2 million loan. Well, maybe they only can get $1.5 million. So they're going to take a $500,000 hit. Okay, I hope that makes sense. Well, what happens is, now not in your area, but a lot of areas is what happens is when there's a bank-owned property, let's say your area is $1 million, right? All the houses on your street are $1 million. But now one of the people on your street, they stopped making payments. They lost their job. Something bad happened. They couldn't continue to pay on their property. So now everybody's at $1 million, but they couldn't continue to pay, so the bank foreclosed. Bank takes it back. Now the bank goes and they sell it for the market rate. Now what's the market rate? I don't know. Maybe it'll be $800,000. So the bank takes a $200,000 hit on that if there was $1 million loan on that property. But what that does is that's a new comp in your neighborhood. That new comp is now where the home values are. Now, even though you're not selling your home price has fallen by $200,000. Even though you're not selling, has nothing to do with if you're selling or not. It has to do with what the last sale closed at, and that is the new comparable. That's where the market is. So a lot of people think, well, I'm not going to sell. I got a 3% mortgage. I'm locked in. I'm just not going to sell. And that's perfectly fine, but your house still goes down. It doesn't stay at $1 million. It just goes down to where the market is, even if you're not selling. So maybe your loan on the house is $900,000. So you're $100,000 upside down. You're underwater. Okay, now, of course, you want to keep paying on that because you're locked in at that 3% and you just don't want to lose your 3%. So you keep paying, and you do this for a year, and then it goes down to $800,000. Well, now you're getting a little upset because you've been paying all this money, and then the next year goes down to $700,000, but you paid $1 million. It's not worth $1 million anymore. All right, so maybe you stop paying because you get tired of paying on a house that's $300,000 underwater. That's not going to recover for the next 5 or 10 years. That's possible. Okay, so maybe you stop paying, and then the bank takes that one back. This is just a downward spiral that we're in now. It's going to get ugly out there. It's going to get ugly. Now, in 2008, we never let that crash unwind. We never let it fully come to a finish. What did we do? Well, we printed trillions of dollars to keep it propped up. This time, the crash is going to have to play out. Now, they can try to print 10, 20, 30 trillion dollars to keep the housing market up, but I'm telling you, this is going to unwind, and I'll tell you why. Okay. So I think the housing market's going to unwind. Now, one of the major reasons it's going to unwind, now this isn't going to happen tomorrow, but look I'm a baby boomer. I'm at the tail end of the baby boomers. The baby boomers are getting old. Look the millennials want the houses, but they can't afford it, and they don't want to pay this price for the house. This would be a nightmare if you paid the prices they're at now. It's not the American dream anymore. Now, I'm an old guy. I remember when houses were actually, well, they weren't financial vehicles. They weren't a financial asset. They were just a place to live. And people bought the house because they could afford it. Now people stretch themselves to get into a house because it's the way to get rich. It's become that financial asset. And then we blew up this financial bubble. All the institutions got in there and started buying. It's a place to park your money now. A lot of homes are sitting vacant. We have 15 million vacant homes in this country. Where are they from? Well, I'm not exactly sure where they're all from, but some of it's foreign money. Foreigners, they'll just buy a house. They don't move into it. They just want a place to park their money, and they feel that real estate in the United States is a safe place to park their money, to get it out of their country, put it into this country, and just let it sit there. So we got 15 million vacant homes. Now, they're not all vacant because of the foreign investors, but a lot of this is going to unwind. Now, how's it going to unwind? Well, there's a couple of ways it can unwind. They're going to, right now, they're introducing legislation to unwind it. It's called the Institution Ban Bill. That it's going to ban institutions from buying homes. Now, is that a good thing? Is that a bad thing? Everybody's got their opinion. I don't think institutions should be in the marketplace for buying homes. Now, I also don't think they would be in the marketplace to buy a home if it wasn't for the Federal Reserve keeping the rates artificially low and buying every 1 out of 3 mortgages. I think this could play itself out if the Federal Reserve would just get out of the business and let us have a free market. Now, there's no free market in the United States. Everybody thinks the United States is capitalism. It is not a capitalistic society anymore. It's sad. It's really sad. We do not have free markets. We don't have price discovery. Nobody knows what your home should actually be selling at. Why? Because rates are artificially low. We got the Fed buying mortgages. Let those things fluctuate. Let it go to where it's supposed to be. And I bet the institutions run for cover. I bet they're going to be the ones sending the houses lower. But anyways, there's a bill out there to ban institutions. Now, what about foreign money? Well, Canada, they're starting just on January 1st. They have a 2-year ban on foreigners buying properties in Canada. Maybe we should do something like that. I have mixed feelings on it in both directions. But a lot of people don't want foreigners coming in and buying a house and letting it sit empty just to park their money just so they can get their money out of their country, which is less stable than our country, if you can imagine that. But this whole thing will start to unwind. Look, right now houses are, I would say they're popularity. They're very popular. Everybody wants a house, and I get that. But it didn't used to be this way, right? A lot of people didn't care if they had a house or rented, and it was all affordable. Once you made the house a financial instrument, and once again, financial instrument that the institutions came in and just bought, 1 out of every 3 houses in the last 2 years were sold to institutions. This isn't the way it's supposed to work in the housing market. And once again, if we could just take the Federal Reserve out of the equation, I think everything would go back to normal. Now, I don't see the Federal Reserve going away anytime soon, but if we could get them away, I think that would solve the problem. But maybe since they're not going away, you may need a bill to ban institutions from trying to capitalize on the housing market and making it unaffordable to people that actually need a place to live. All right, and what do we do with the foreigners? Well, maybe we have to use legislation and not let them buy houses for a while. Just a 2-year ban might be all right till houses normalize. We'll see how that all plays out. Anyways, if you like this stuff, I'm Tall Mike. It's a Friday. Get out there, everybody. Have a great weekend. If you really like it, hit the subscribe button. I want to talk to you next week. Next week, we got some good things going on. I'll be back then. Bye-bye now.